Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Gruenbaum, founder and CEO of TipRanks, to discuss analyst rankings and what it means for investors. Yuri, it's great to see you again. Welcome back to Trade Talks.
Thank you, Jill. It's great to be here.
TipRanks provides a service that, among other things, tracks analyst ratings. What do these ratings teach us?
So generally, analyst knows how to move the market, right? When an analyst from a big bank is going to say buy or sell a stock, you're going to see the impact regardless of the size of the company. But for the average investor, the analyst rating shouldn't say much, because what we see is that the average return of an analyst rating, an analyst that you know nothing about and just came across in an article online, would be around 10%. That was their returns in 2020, while the market did almost 20%. If you have tools like TipRanks that help you to evaluate how good this analyst is, then you can definitely get an edge. You can see if you're getting advice from the right person, someone who has proved himself to outperform the S&P or other indexes, or if it is someone that has no idea what he's talking about, which is in many times the case.
Should investors distinguish between buy and sell analyst ratings?
So, most of the ratings today are buy ratings, like about 65–66% of all the ratings are buy ratings. And usually if you're an analyst and you will give a sell rating, it means that you're pretty brave and you really think that you should be selling the company, because it's pretty unusual. The big banks, I'd say the Goldman Sachs of the world, they provide about 15 to 20% of their ratings are going to be sell, but the tier 2, tier 3 are almost always going to see a buy rating. Now, obviously, sell ratings do not perform as well as buy ratings because the market has been bullish for the last 12, 13 years. But you should distinguish. I mean, when you do see a sell rating, then it should alarm you. You should be reading more about it, understand why someone has changed his opinion and now suddenly thinks that a stock is a sell.
We know TipRanks tracks analyst performance. How do you do this, and how can investors use this information?
So we're looking at every possible resource to see on what any analyst in the world is saying. We get a lot of reports directly from the banks. We will analyze any idea that is being available, that is being published on financial news websites such as Nasdaq.com or other websites. And we get a lot of ratings directly from our users who can mention that we missed this or missed that. What we do at TipRanks is we look at three main factors. The first one is, what is the average return of these recommendations? Whenever we will come across a rating from an analyst and also a blogger and other individual investors, when it comes to analysts, we will see on what is their average return on recommendations that they have given historically. We will look at their success rate, how often are they right, and then we look at the significancy of the data. Obviously, the more we know about a financial expert, either an analyst, a blogger, or anyone else, the more we know about him, the more likely he will be ranked very high or very low. It's kind of like tossing the dice. So you can be right 3 times out of 3 times, but it's still much more difficult to be right 70 times out of 100.
Who were the best performers in 2020?
So in 2020, the top 3, the first one was Jason Helfstein from Oppenheimer, who had an average return of 30%. Number 2 was Mark Mahoney from RBC, which is someone that we see on our list almost every year. So Mark Mahoney was number 2. I know that he recently moved to Evercore, but his performance was measured while still in RBC. And then we have David Hines from Canaccord Genuity, whose average return was 21.2% this year on recommendations that they gave. They all cover the technology sector, which makes sense because that is a sector that really blew up this year.
Can you tell us which stocks these analysts are recommending for 2021?
Sure. So Jason Helfstein, I guess most recommended stocks is Dropbox, where he has a price target of $58, which I believe reflects about a 30% upside. Twitter. We have Mark Mahoney, who has been bullish on Netflix for many years now, but also gave a very high price target earlier this year and has a price target of $630. And David Hines from Canaccord recommended Dropbox with a price target of $30. And these are the top 3.
And finally, TipRanks analyzes big financial data and powers Nasdaq.com's smart portfolio with data-driven insights. Tell us more about the partnership.
So we actually have a wonderful partnership going on with Nasdaq for the last few years. We created together a tool that allows investors to see all the big data that we analyze in one place, streamed directly to their portfolio. They can sync their portfolio with their bank, but more importantly, they can see what any expert in the world thinks about their stocks, and they can filter out all the underperforming experts. So if you have an average watch list, now you have a watch list that shows you what real experts think about your portfolio, and you basically get data-driven insights. It could be news sentiment, social media sentiment, of course, analyst research, and a lot of corporate events. And that's been doing phenomenally well with very high engagement numbers that we're seeing on Nasdaq in terms of the amount of frequency that people are visiting their smart portfolio.
All right, Yuri, appreciate the insight. Thanks for joining us on Trade Talks as always. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.